We've got PFC in focus on account of listing their global notes on the NSE. They've raised $750 million via an FX bond listing. Rajeev Sharma is joining us on that as well. So we're just going to talk to him about that in a little bit more detail in just a couple of seconds. So, okay. So, Mr. Sharma, thanks for joining us. Now, you're listing about $750 million US foreign currency bonds on the NSE. How do you intend to utilize the proceeds?
It will be used for our corporate lendings, for power sector in transmission, distribution, generation, renewable. It is in accordance with the guidelines of Reserve Bank of India for external commercial borrowing.
How are you assessing the funding market? Are funding costs still elevated? And how do you see your overall borrowing mix shaping up, sir?
Our borrowing this year was around 12 billion US dollar. We have already borrowed almost $9 billion from both the market, domestic as well as international. Next year also we are expecting 12 to 13 billion US dollar next year for our business.
How are you assessing the overall funding market?
Funding market, I think it is stable and we are able to reduce our cost of funds. It used to be 8.21%. It has come down to 7.86% now. After diversifying our borrowing portfolio, we have been able to reduce our cost of funds.
Okay. The power sector continues to be under stress. What are the broad asset quality trends that you're seeing there?
The stressed assets were due to coal shortage, PPAs not happening, and financial health of state distribution companies. But Government of India has addressed all these issues one by one. Like for coal linkages, new scheme of Shakti, for coal auction, for those projects which are not having fuel supply agreement but having power purchase agreement has been addressed, and more than 12,000 megawatt capacity has got coal linkages under this scheme. Similarly, for new PPAs, a new scheme, pilot scheme of 3-year medium-term PPA has been brought by Government of India. One scheme was successful and 1900 megawatt PPAs were signed under that scheme. Pilot scheme for PPA second tranche is also on, and within 2 months it should also be closed, and we expect that minimum around 2,500 megawatt PPA should be signed under this scheme. And for regular payment of generators, letter of credit has been made mandatory by Ministry of Power. It's a welcome step, and I think most of the state power utilities have made letter of credit available to the generators.
What's your outlook on the power sector and credit uptick in that segment? What are some of the key trends that are emerging there?
Share of renewable is increasing, as you know, that by 2022 our target is to add 175 gigawatt, which has further been revised by Honorable Prime Minister to 450 gigawatt by 2025. So share of renewable is increasing. Likewise, it has increased in our portfolio also from 1% to 6%. It has to further increase because Government of India has made a commitment in COP21 to have at least 40% renewable energy capacity addition in our total installed capacity by 2030. Our share is increasing in transmission and distribution. We are also exploring other areas of financing like smart grid, smart cities, electricity infrastructure will be created in those 100 smart cities. We are also exploring the possibility of funding in electric vehicles, charging stations, charging devices, batteries, and also irrigation projects, electromechanical part in that.
Okay, what is your expectation then from the budget? What do you think that the government needs to do in terms of a resolution for the power sector stress that has been mounting?
Ultimate consumer of power are the distribution companies. If they are financially viable, the sector will be financially viable. I think government should bring some scheme to restore the financial viability of distribution companies, and let us wait and watch for the next budget.
How well capitalized are you currently? Do you have any capital raising plans?
Not as on date. We don't require any additional capital. We are quite comfortable now in our capital adequacy ratio, which is regulatory requirement is 15%, and we are at 18.31% today. So we don't require any additional capital. We are comfortable to do our future business. When we were acquiring REC, there were concerns in the market from the rating agencies, from the investors. But the day we acquired REC, we were quite comfortable. Our ratings were restored by rating agencies, and now we are at 18.31. Rather, it will further improve once we are able to resolve our stressed assets, which we are in the process. 4 projects are in advanced stage of resolution. 2 projects we have already resolved during this financial year: Amravati, Ratan India Amravati, and GMR Chhattisgarh we have already resolved, and other 4 are in advanced stage of resolution.
Sure. What's been the update on the resolution of the stressed asset accounts? Where does your total exposure stand? And what's the quantum of recoveries expected?
Our total loan book is roughly 3,50,000 crores, out of which 83% is government utilities, where there is no NPA. Remaining 17% is private sector, in which roughly 8% is perfect, 9% is stressed, and most of them are thermal, coal-based projects. But Government of India is resolving the issues because of which these projects became stressed. Like I explained, Shakti scheme has been brought for providing coal linkages to these stressed assets. New pilot scheme has been evolved of 3 years, medium-term PPA for these stress projects. And thirdly, letter of credit has been made mandatory by Government of India for all the generators, and most of the state utilities have made these letters of credit available to the generators.
And you spoke about the combined entity of PFC, REC. Have the synergies and benefits flowed in as yet?
Of course, we acquired last year REC, 52.63% share of Government of India in REC. It became our subsidiary. After that, we were directed by Government of India to appoint a consultant to explore the synergies and pros and cons of merger of REC with PFC. We appointed a consultant, Deloitte. Deloitte submitted its report. The report has been submitted to Government of India, and final call is to be taken by Government of India whether to merge or not.
We appreciate you joining in and sharing with us your outlook. Thank you so much for taking time out.